Good afternoon, ladies and gentlemen. Welcome to the Billington Holdings PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Before we begin, we'd like to submit the following poll, and if you give that your kind attention, I'm sure the company will be most grateful. And I'd now like to hand over to CEO Mark Smith. Good afternoon.
Good afternoon. Hi, I'm Mark Smith, Chief Executive Officer for Billington Holdings, and I and my colleague Trevor Taylor, Chief Financial Officer, would like to welcome you to our 2023 interim results presentation. Our executive, next page please, Mark. Our executive summary provides some of the highlights of 2023 to date. Trading over 75 years, Billington is a group of companies consisting of one of the leading structural steel fabrication and construction businesses, Billington Structures, trading from 3 sites, 2 close to Barnsley and 1 near Bristol, a steel stair and secondary steel manufacturing and construction business, Peter Marshall Steel Stairs, based near Leeds, a heavy steel processing company, Shafton Steel Services, trading from a site near Barnsley, a unique site hoarding company called Hoardit, an associated graphics division, Brandit, based near Barnsley, a construction safety barrier hire company called Easy Edge, trading from Tuxford near Newark, and more recently, a newly acquired paint treatment company called Specialist Protective Coatings, based in Sheffield, all of which we'll provide more detail of later in the presentation. 2023 has been an excellent year to date for the Billington Group, achieving record first half results. We've been able to increase labour levels to meet production requirements, continue the implementation of our strategic investment programme, which has generated further efficiencies and quality improvements, whilst managing cash levels to fund high levels of work in progress. Our specialist treatment company, SPC, acquired in 2022, is now fully integrated in the business and operating at near full capacity and trading at expected levels. Next slide, please, Mark. The slide details the current significant shareholding of the group, along with the share price movement over the last 12 months. It is disappointing that whilst the group is delivering a record performance, the share price continues to be impacted through the current macroeconomic uncertainties surrounding the UK and global economies. Next slide. This divisional breakdown particularly shows the success of Hoardit and its associated branding division Brandit over the past 18 months, combined with the successful integration and progression of the Specialist Protective Coatings entity. Next slide. The next few slides provide a snapshot of the projects carried out by the group companies. It can be seen that the Billington offering is delivering some of the largest, highest profile projects for the most reputable end user clients. From production facilities for Jaguar Land Rover, to data centres for the world's leading software provider, from energy to waste power generation plants for a world-known technology conglomerate, to a factory supplying cans to the widest drinks brand, it's the real thing. As a reminder, Shafton Steel Services, a division of Billington Structures Limited, provide market-leading steel processing services to a diverse range of steel fabrication, construction, and wider engineering companies across the UK. Next slide. Peter Marshall, shown here, have enjoyed a very busy 2023 and boast a strong order book going into the second half and further into 2024. It can be noted here the wide range of clients Peter Marshall has, as well as in-group trading with Billington Structures. Contracts secured by Billington Structures in the power generation and data centre market contain large packages of steel stairs and metalwork that Peter Marshall completes alongside Billington, providing programme and cost benefits to its clients. Specialist Protective Coatings, shown, acquired in 2022, provides specialist paint treatment services to Billington Structures alongside a diverse range of clients across many sectors. The increased adoption of its off-site fire-resistant paint treatments provides further confidence the demand for its services will continue to increase moving forward, The company operates from a site in Sheffield and is one of the best invested and capable off-site paint applicators in the UK. Next slide. EasyEdge has suffered slightly due to the softening of the commercial office market. However, trade has still been significant and the company has made a valuable contribution to the group in the first half. Again, there is a broad range of clients as well as in-group intertrade. Audit continued to expand in 2022 to become the second largest within the group. Pleasingly, the momentum gained in 2022 has continued in 2023 with a strong first half result for the company. Brandit, a division of Audit, has further progressed in the period as we seek to add additional margin enhancing services to the company's offering. Next slide. In the first half, we have continued to deliver a number of successful projects in more robust sectors such as energy from waste, online retail distribution and storage, data storage and the film industry, as well as still servicing the larger commercial offices, education and infrastructure projects. Many of these projects have benefited from the investments made and have also fully utilised the various group companies, which has resulted in an excellent performance from all trading divisions. Having witnessed record material price increases in the last 2 years, partly due to the Ukraine conflict and high energy prices, the supply market has settled, material availability has improved, and prices softened during the period. We feel that supply side is now stabilised, providing good visibility for all future contracts. We have reported previously on our strategic capital investment programme, and we are pleased to advise that this has continued as planned with the installation of state-of-the-art saw drill line machinery and the extension of our steel processing offering at our Yate and Shafton facilities. We are mindful of the current macroeconomic environment and the failings of a few high-profile principal contractors. We remain vigilant, working with the most financially robust clients to manage risk and maximise the credit insurance cover available to ensure risk is minimised. Cash has been well managed during the period, despite record high levels of work in progress. The dividend paid, combined with continued high levels of work in progress in Q3, will see a period of cash usage before an anticipated increased cash position by the end of the year. We are very comfortable that we have the cash resources to continue to fund the business and its anticipated growth. Next page, please.
As Mark has mentioned, the first half of 2023 represents a record trading result for the Billington Group. The positive levels of trading have continued into the second half, and as a result, the anticipated statutory profit outturn for 2023 has been revised upwards by 24%. The first half revenues of 60 million, the group has achieved an operating profit of 4.6 million, with an associated margin of 7.6%. The return on capital employed is a market-leading 38%, with further enhancement anticipated in the second half of the year. The group repaid its remaining debt in the period to mitigate any impact of rising interest rates. The group is now debt-free. Cash has been managed well, and with the significant levels of work in progress are delivered in the second half, further growth in the cash balance is expected at the year end. Earnings per share for the half year was 28.8 pence, an increase of 231% from the first half of 2022. Next slide, please. The income statement. Revenue has increased 30% from H1 2022 to 60 million. EBITDA and operating profit margins at 9.4% and 7.6% respectively both saw significant progression from 2022, with increases of 141 and 245%. Statutory profit before tax at 4.6 million for the half year and forecast by the brokers to be 9.94 million for the full year highlights an improving backdrop and our confidence in the current trading levels. This represents an upgrade of 24% on the previous broker's forecast. Next slide, please. The group's balance sheet remains robust and is underpinned with significant property and cash assets. The group owns the majority of its properties, and these are held within the accounts at historical cost. The market value of the properties is significantly higher than they are held on the balance sheet. The cash balance at 30th of June was 10.8 million and was largely consistent with the balance at the previous year end, after considering the debt repayment made in January. High levels of work in progress combined with the significant dividend paid in July of £2 million will see a reduced cash balance during quarter 3 before increased balance in quarter 4. The group has a legacy final salary pension scheme, which as of 31st of December was, unlike many of our UK industrial company peers, in gross surplus of 2.3 million. The investments within the scheme were de-risked in 2021 and are largely held in government bonds. The latest value is, as of December 22, we don't revalue the scheme at the half year, although I would not anticipate a material change from the level of surplus at the year end. Our robust balance sheet provides stability, certainty, and ability to capitalise on opportunity as they present themselves. Next slide, please. This slide gives a list of some of the capital expenditure projects that have been completed or were in progress at 30th of June. The anticipated level of capital expenditure for 2023 will be in the order of 3.5 million, a level that is anticipated to continue for a further 3 years while the capital investment programme continues to be delivered. Depreciation is in the order of 2.25 million per annum, and the capital expenditure is anticipated to be funded through operational profits over the 3-year period. Next slide, please. This slide provides the movements in the cash balance from the year end to the half year. Next slide, please. The wider steel market. Following a volatile period with steel price escalation and material supply constraints in 2022, it is pleasing that stability has returned to the market. Reduced energy costs combined with a reduction in global demand has resulted in a softening steel price during the first half of the year. It is anticipated that steel prices will remain stable for the foreseeable future, providing confidence to developers and end users for their projects. The group has a balanced steel supply from UK and overseas manufacturers and stockholders to ensure that risk is mitigated through a spread of supply. Next slide, please.
The level of recently secured project is encouraging, and we highlight here the forward order book for our largest group company, Billington Structures. This provides confidence for the full year. The future pipeline remains strong in the more robust sectors, and work is secured into Q2 2024. Within the appendix is a graph of future anticipated structural steel output. This graph depicts a breakdown of the market sectors for the constructional steelwork industry. The forecasts published by the Constructional Steelwork Association, the BCSA, predict a contraction to the UK market of 3% in 2023 before returning to growth in 2024. The power generation, infrastructure, and data centre markets remain buoyant, with significant opportunities for the group moving into 2024. These markets provide work prospects for all of our group companies. As government policy is refined, it is anticipated that increased projects in the health and education areas will provide further opportunities for the steelwork sector. Next slide, please. Billington believes that operating in a sustainable and responsible manner is key to the growth and success of the group. The company created an ESG focus group that reports into the board to ensure that our environmental and social endeavours are front and centre of all of our decisions. The reduction of carbon is very much a focus of the group, and the roadmap has been established to achieve net zero by 2050 in line with Steel Zero. Next slide, please. That being said, following a number of carbon reduction initiatives, including lighting, heating, machine adaptations, and transitioning the vehicle fleet, the company has committed to the provision of green energy tariffs and has subsequently offset its remaining carbon consumption through Carbon Neutral Britain. Billington Structures has been certified carbon neutral by Carbon Neutral Britain, and it is anticipated that the remaining group companies will reach carbon neutral status in the near future. This represents a significant milestone for the group. Next slide, please. The group has a defined strategy to drive long-term growth focused on both organic and inorganic development. We continue to focus on margin improvement and driving efficiencies with our targeted capital expenditure program and other margin improvement projects, together with increases in direct labour recruited from both the UK and overseas. We continue to focus on training and developing skilled labour locally, working in partnership with a number of education providers. Europe presents a further opportunity for growth, together with expanding the markets we serve and focuses on larger, higher margin contracts. The Specialist Protective Coatings acquisition last year has demonstrated the benefits to the group from acquiring complementary businesses that can diversify and increase our offerings to our customers. We continue to look at further acquisitions and will undertake these where appropriate. Next slide, please. In summary, the structural steelwork market is set to increase in the sectors we are most active. Billington Structures, with the support of our group companies, provides services to the largest Tier 1 contractors and, with the strong financial resources and much improved efficiencies, are confident of improved margins and good return of investment. Close relationships with our steel supply partners and broadening supply opportunities will put us in a good position to manage materials, supply and price volatility. We continue on our journey of structured capital expenditure, which will serve to modernise our facilities, increase our capabilities and improve our efficiencies. Hard work and foresight, along with diverse thinking, will see the group benefit from the recent influx of skilled staff to aid delivery. This is all underpinned by a very strong balance sheet. We thank you for the time you've taken to listen to us today. The appendix in this presentation provides further information for your perusal, and as ever, we are willing to receive your questions either directly or through our representatives, whose contact details are on all of our announcements. Next slide, please.
That's great. Mark, Trevor, thank you very much indeed for updating investors, and I will just bring your camera back up, and thank you for your time this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Mark and Trevor just take a couple of moments to review the questions submitted already, I'd just like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Firstly, thank you to everybody for your engagement this afternoon. Mark, Trevor, you can see you've had a number of questions from investors this afternoon. If I may just hand back to you to read out those questions, and then I'll pick up from you at the end.
Sure, thank you very much. The first one I can read is, how would you further increase capacity? Really, we see this, we're in a good cash position, and we've been able to be inquisitive in securing businesses to assist with our growth. How can we increase capacity within Billington Structures? In the main, as part of our capital expenditure plan, we've been looking at replacing key items of equipment. This will enable us, if we choose to and we get foresight to, look at additional shift patterns within Billington Structures. We have been on a program then of securing increased resource in terms of labour, and our allegiance with a training organisation called Better World, which is recruiting UK labour and training, is now going to be operating for our facility in Shafton, hence providing a good supply of UK labour of which we will consume in full-time employment once they have successfully been trained.
Okay, thank you. Next question. Can you give us some further details on the capital investment programme? We've spoken about this previously. This was a 5-year plan to modernise principally the Billington and Shafton facilities, 2 in Barnsley, 1 in Bristol. The machines that we need for the process largely have a 15 to 20 year life cycle. Some of the machines are somewhat aged, out of date, an opportunity provided really for efficiency improvements through the processes the machines can complete. Needed to be a structured plan, which, as I say, we've just completed year 2 of that 5-year programme. There's 3 years left. We anticipate levels of about 3.5 million a year for the remaining 3 years. Put that into context, depreciation runs a little over £2 million a year. So we are anticipating and forecasting a cash usage throughout the group of about 1.5 million a year for the next 3 years that will be funded through the operating profits during that period. At the end of that period, CapEx will normalise to much lower levels below the level of depreciation for a significant period, 5 to 10 years, while the new machines run off their useful economic life.
Okay. Next question. Are you seeing cross-selling opportunities in the protective coatings business? Yes. It's all in timing, really. We spied this acquisition and the creation of SPC, Specialist Protective Coatings, because the application of fire retardant paint is an ever-increasing requirement in the structures for Billington structures, as well as the treatment of stairs for Peter Marshall steel stairs. The change of building regulations will see an increase in the requirement of fire-resistant paint, and this facility at SBC services that requirement for Billington structures and in-group. However, we have managed to retain a number of the cherished clients in SPC, treating large vessel and tank structures into other sectors. And so we're proud to say that that business now is operating efficiently, effectively after a program of capital expenditure, and is now in profit in line with expectations.
Okay, thank you, Mark. Next question. Have you seen inflationary costs stabilise, and have those been passed through in price increases? We categorise our costs, principal costs, steel, as well as general overhead costs within a contract. Steel prices, of course, the main input cost on a contract, are generally hedged upon the inception of a contract to the company. What we mean by that is we seek to agree a price for the materials as we secure the contract for the life of the contract. So we pass that risk over to either the steel manufacturer or the stockholder that's chosen for that contract. General overhead price increases are not hedged. We do try to build these into the overhead cost base at the start of each year. And if those prices rise higher than we have anticipated, there will be a shortfall within the contracts. Generally, I hope the results show that we have been successful in predicting those to quite accurate levels. Have prices stabilised? Steel, as we've mentioned in the presentation, has seen a softening over the recent 6 to 9 months. Other costs within the business we have seen stabilise significantly. Labour, of course, has continued to run high relative to current inflation levels, and we have sought to give increased price of living or cost of living increases to our staff in the year to assist in the cost of living for our staff.
Thank you. Next question. Are there any additional bolt-on value-added businesses you would look at? Any specific areas of focus? Well, you can see from the history of the company, we've continually analysed our spend, our subcontract spend, and it's been no surprise that we've enhanced the group offering to accommodate some of these subcontract spends. I wouldn't say we're finished looking. We are inquisitive. However, at the moment, we're more likely to look into sectors that we're not quite covering with Billington structures that utilise our in-group companies, such as maybe infrastructure, and that remains attractive to us. We will continue to be inquisitive. However, at the moment, looking at bringing in other subcontract businesses probably isn't that high on the focus as we speak at the moment. We've kind of fulfilled that requirement. As you noticed there, though, that all of our group companies are badged up as individual businesses. And one of the unique offerings is, as much as Billington Structures can offer construction solutions, assuming these subcontracts into their main business, those individual companies also tender to our competitors and our clients directly outside of Billington's. And Billington's will assume those at a competitive rate, as well as the client could directly. So in that way, we enhance that offering from the group companies.
Thank you, Mark. Next question. There was one-off boosts to margins reported in H2 22 and H1 23. What is the outlook for margin in 2024? Your broker is forecasting a fall. As we've reported in the presentation and in the announcements today, part of the margin earned in 2023 forecast for the full year are one-off additions relating to steel prices and energy gains. These are forecast to be non-repetitive as we move hopefully into a more stable environment. So the forecast of the brokers in 2024 is actually forecasting a consistent trading result of that of 2023 once those one-off non-reoccurring items are removed from the results. Next question. What is your share of the UK market? The UK market for structural steelwork, I think there's a graph in the appendix, is about between 800 and 850,000 tonnes per annum. Billington's currently processes 50,000 tonnes per year. So that gives us a market share of the overall structural steelwork output in the UK of a little over 6%.
I think there's a couple more here. What are the prospects for European orders? Have you bid on projects, and what is the obstacle to success? Well, we've got a group history of delivering projects into Europe and Scandic countries, and so this doesn't really present so much of a challenge. We completed successfully a large data centre in Belgium just before Brexit, and we decided to take breath whilst the export market and its new method of working were realised. We're now in a position where we're looking at opportunities now currently to go back into Europe, and I think that will feature in our 2024 workload. It will be in the same markets that we've successfully delivered for in the past, and we'll be delivering for UK clients that have an activity in Europe, so it's a well-known client to us. It wouldn't surprise you to realise that actually features high on our opportunities, especially if we're looking at what's coming forward in the UK market. I think that's probably it, isn't it?
Yeah, I think that's all we feel able to answer today.
That's great. Trevor, Mark, thank you very much indeed. And if any other questions do make themselves available, we can make those available to you post today's call. Mark, Trevor, I know investor feedback is particularly important to you both. I'll shortly redirect everybody on the call to give you their thoughts and expectations. But before doing so, I wondered if I may, Mark, maybe just come back to you just for a few closing comments. And then, as I say, I'll redirect investors to give you their feedback.
I'd just like to thank everybody for their interest in this, in the presentation and the company to date. We are in a good position. This is a cracking set of interim results that gives a good view as to how we're progressing, both in growth and the success of our strategic capital investment. We're pleased then to look at what's an emerging good pipeline of orders going forward, and we're confident of a good full year set of results going forward. The strong pipeline into 2024 gives us confidence again, and I'd just like to thank all of our investors, our shareholders, for the loyalty, and encourage them to keep investing.
That's great. Mark, Trevor, thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order the management team can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Billington Holdings PLC, we'd like to thank you for attending the presentation this afternoon. Good afternoon to you all.
Thank you.
Thank you.